All right, y'all, back to work. Boy, pretty darn good day today. Now you know why we love range rotation so much. Boy, speaking of range rotation, we have some stacked ranges on both the S&P and the Nasdaq right now that may not sound like a big deal, but I'll tell you, once you learn how when ranges stack on top of each other, it makes trading really easy. In fact, I've got a couple of really nice trades I'm tracking for tomorrow. We'll cover all the details in tonight's video. As always, I want to make sure you guys have a roadmap, a game plan to make some money tomorrow as well. So charts look pretty darn good tonight. Enough of the intro. Let's go find some winning trades, make some more moolah on what should be another great day tomorrow in our trade room. The S&P and SPY is all ready tonight. Nasdaq, triple Qs are all ready. I have three very simple but pretty important clues that are telling me where I think the winning trades are waiting for tomorrow. One of those big clues is right here on these hourly, these 60-minute charts in front of us right now. We have a bullish market on the S&P SPY into a trading range, and the market is trying to rotate back and forth from top to bottom of that trading range. A similar situation right now over on the Nasdaq, that strong run up into a range. And if you learned one thing from last night's video, it's markets love to rotate up, rotate down, and we assume right now these buyers are trying to finish off that rotation going higher. So whether or not you're on this big range on the S&P looking for rotation going higher, or you're trying to finish off that big swing off the low, the buyers have all the control right now on the higher time frame. Now, this will give us a good overall directional filter, but these hourly charts, so they're not going to help us time the entries for tomorrow. I have two probably more important clues help us time the entries on some faster time frames. We're going to grab those in just a moment though. Before we do that though, let's check schedule for tomorrow. There are three things on my mind for tomorrow. First things first is the quarterly Treasury announcement tomorrow morning at 8:30 Eastern time. Now, this may be a nothing burger. It's tough to tell how much the markets care about this right now because of the tariff talk going on at the White House, but something I'm definitely watching for tomorrow. What I'm very confident, though, is that ISM services number at 10 o'clock Eastern time. You best be ready for some action around the ISM services at 10 a.m. tomorrow. And one final thing for tomorrow night, there'll be no video published tomorrow evening for the nightly newsletter. I gotta be out of the office for some meetings tomorrow night, so we'll come back on Thursday night and resume our normal schedule. So again, we'll see if the Treasury announcement gets things cooking tomorrow morning. Certainly keep your eyes though on the ISM index, and I'll miss you guys tomorrow night here. We'll come back though and get back to business on Thursday evening. Let's get back to our charts though, because we all know by now, at least we should know by now, the money is made on the charts. I mentioned earlier, I had three total clues, right? One clue is this overall bullish range we have on the S&P and the SPY. Nasdaq, very similar. But again, we're not going to trade off this time chart. I like tick charts better. I think tick charts make everything a whole lot easier. Let's drill down to some faster time frames now. This is a 7,000 tick chart, and that, my friends, is the 21 EMA, in case you're watching here for the first time. I mentioned earlier that we had some stacked ranges, and you're seeing that right now. We've got a range down here, a range up here. You could probably go back, right? Go back there, previous range there. But most importantly, these are stacked. Now, why is it important? Well, if you watched last night's video, we talked about how ranges love to rotate, right? Down, up, right? That was a big rotation we saw this morning. And this range right here, it rotates up, down, back and forth we go. Now, when you stack these on top of each other, when you've got two ranges within close proximity, what ends up happening is this most recent range becomes a magnet, and the previous range now is right for what is basically a breakout pullback. So you have to think right now, a lot of buyers would love to get down to that previous range, use it as a breakout pullback. I have three different ways to trade that version of the breakout pullback. You know, I don't have a crystal ball for tomorrow, so I want to make sure to go over a couple different variations of trades I'll be watching tomorrow in our trade room. And then, boy, remember this range right here, as it rotates off that low, This could be another one of those slingshot reversals we talked about in last night's video. I have 4 ways to trade a strong breakout going higher. Why don't we cover that a bit later on the Nasdaq here? For right now though, I would love, one of my favorite trades here for tomorrow would be a run lower, tag that previous range, and buy it back up again. Now, to do that though, the challenge of course is I can't pick the bottom on this, right? So what I'll do is I'm gonna look for what is basically a bear trap. As we go lower here, this is a really bad spot to be a seller. Like back down here, right? You wouldn't want to sell below a trading range, right? But I can almost guarantee you a lot of rookies are not going to watch my videos. They haven't learned this lesson yet. So one easy way to buy down here without using special indicators or picking tops and bottoms is to let the bears come in once, let them try twice, and then light those stops up. I call these 2 try failure patterns in our trade room. And all we do is wait for the pullback to the moving average, let those bears commit a couple times, and then look for ways to buy into their stops. Because think about it, once you are stopped out as a short seller, you buy your way out. Now remember, where does the market want to go right now? It wants to rotate back up. In fact, we'll drop below the low, pin back above the high, what we call these pendulum swings in our video classes. So we know now where the market wants to go. This is where you can make a lot more money by adding to your winners. When I say add to my winner, there's one pattern we always look for in our trade room. It is a technical bear trap pattern. It's a very, very simple pattern. Now, it will separate off that moving average. It'll run up, and the pullback will barely miss the 21 EMA. Then we'll get a higher high in price. That sets up the entry right below that low. This is a failure into a trap combination. And as always, in a range market, I'll take a big chunk of profit off at the top of that range. But again, promise me in range markets, you will leave a chunk to run. A well-placed runner in a range rotation, stacked ranges, can make your entire week. That's one of 3 ways I'm going to trade that bear trap. Now, let's face it, I may not get the chance to trap those bears in. What does happen quite often is we'll get a nice strong shot going lower. I'll be looking for a way to trap the bears in, but there's so many buyers down there, it just whoop and runs right back up again. If that happens, the pattern that I always look for now is we call a V-bottom reversal. These are very simple. I'm going to draw a trend line off the highs, bring that trend line down around that low. Then I'm going to look left and find a prior swing that lines up ideally around the low of that channel. In my trade room, we call this the first test is the best test. It's the first pullback, the low of that channel. And if we're lucky, we'll get a nice, easy bear trap entry right below that prior swing. Remember, wait for the proper signal candle I teach in the free video classes. And again, let it run. That's 2 out of 3 trades I'm watching for tomorrow. One more variation though, one more variation. This is one of my favorites. We oftentimes see a real strong move down. We oftentimes get a nice, easy bear trap down here and squeeze those stops. But you know, ranges love to break out pullback. So every once in a while, I will get my 1-to-1 first target. I'll remove the risk on that trade. It's a winning trade, but for whatever reason, it holds the underbelly of that range and we see another leg going lower. Now, the hardest part about these is this will feel like a reversal. It's not. Remember the overall trend on that hourly. When I get back to that low now, anybody who sold up here, they take their profit. They buy down here. This is a horrible spot to be selling. It's a retest trade. Retest trades are a gift to the buyers and a second shot at a bite of this apple. Trap those bears in. Use those stops now to fuel that move going higher. And again, want to make more money? Add to your winners. Higher high in price, right below that low. And again, the target now is back up to retest the highs and leave that runner. Now, I do want to talk about if this thing slingshots and runs higher. Before we do that though, let's slow down for a few moments here because I know most folks watching right now, You know these patterns already. You're making money with these. I get so many great emails and comments every week on these channels, so well done on that. But if you're here for the first time right now, this might be a brand new strategy you've never learned before. Don't you worry. I teach the entire roadmap. In fact, I have a ton of examples of bear traps, V bottoms. I have so much more I want to share with you. I'll put a link up top here for you, upper right-hand corner. Hit that link that popped up there and take that free trading course, because the strategy I teach in that video course will teach you a simple trick we use in our members trade room that literally tells us exactly where the winning trades are going to be each morning. More importantly though, I want to teach you my 4 favorite entry setups so you can time better entries, make a lot more consistent money. Guys, bottom line, the markets are way too good right now not to be hitting profit targets each day. So if you're tired of missing the best entries, if you've lost your confidence in your current trading strategy, again, hit that link that popped up there. Watch that free video course. Everyone loves the trade examples I include in that short video series. The best part is it is all 100% free for you. And also too, keep in mind too, I'm going to put all the important links in the description of the YouTube video right now. Start first on the free video classes. Most folks start making money on their own, all from that free video series on our website. So start there first. And if you're on Twitter or X, I post a ton of charts and videos and mindset stuff on Twitter X in between these YouTube videos. If you're on Twitter X, give me a follow. Again, all the details you'll need to learn more and hopefully earn a lot more because of it will be linked up for a description of the YouTube video. So where did we leave off? Where did we leave off? Oh, yes. What if we start ripping, right? What if we start ripping, running higher here right now? Why don't we talk about that on the Nasdaq? Nasdaq, of course, is quite similar here to the S&P. We're overall bullish, of course, on the hourly chart. I want to dive into that 60-minute chart here in a moment. Before we do that though, if you're enjoying this video right now, please help me grow this channel by hitting that like button. Make sure you subscribe, because YouTube rewards me every time you like, share, and subscribe on these videos. I know we're busy people. I appreciate all you spending time with me every evening here on these videos. So thank you so much for the likes, shares, subscribes, all the ongoing support. Now I'm done begging for your likes here. Let's dive in to our tick charts here. Again, most important thing on the Nasdaq right now, bullish into a range. We're trying to rotate off of that low. This could produce a very, very strong rotation going higher. But let's now drill down though faster now to our tick charts, right? Because again, the hourly charts are great, but the hourlies just give me the overall direction, the bigger picture levels. The tick charts are where I think the easiest money is made here. Boy, what a great example tonight of stacked ranges, right? Range right there, range right there, range right there. I'm telling you, once you learn how ranges work, everything in trading gets so much easier. How about that beautiful surprise? Was anybody surprised? The amount above, the amount below. The only problem with that was it happened right just after midnight, late last night. Sometimes you get them, sometimes you don't. But that's a great example though. Whenever we have range right there, the previous range is a breakout pullback. The new range is the magnet to rotate, running higher here. Now simply fast forward that now to the chart we're seeing in front of us. There is a trading range there. There's a stacked range on top. I talked earlier about on the S&P, right? If we make our run lower, I gave us 3 different variations of those trades as we go lower. They're all bear traps, right? As we go lower, we trap the bears in, squeeze those stops and run back up. We talked about double bottom retest. We talked about V bottoms off that low. So same basic idea here on the Nasdaq as we talked about earlier on the S&P. Now, I want to talk about if we slingshot off of this low right now. Earnings just came out from Google and AMD. It seems like the world has not come to an end yet with the Trump tariffs we saw late over the weekend. So markets are pretty bullish right now. This may not give us that pullback. What if we start going higher here, right? What if we start going higher? Well, first of all, in my trade room, we always talk about how it's failures at the edges and traps as we rotate. Failures at the edges and traps as we rotate. What does that mean? It means that as we go lower, we look for failures at the edges, right? The money is made in ranges around the edges, right? The top and bottom. In fact, that one rule, right? That one rule, trade the edges of the ranges, will easily keep you out of most losses and will keep you focused on where the best money making trades are going to be. So around the edges, we look for failures. 1, 2, right? Failures at the edges. Now, as it rotates, we look for traps. Traps as we rotate. And again, traps are very simple. We want to get that separation away from the moving average. I can't emphasize it enough. So valuable for that separation. Separation, higher high, right there. Okay? Again, think about this pattern here. That's a failure around the edges and a trap as it rotates. Okay, if you understand that core principle, then if we go higher, what is it doing? It's rotating off of that low, right? It's rotating off of that low. So if we do wind up running higher here, what happens? We look for traps as it rotates. Remember, as it rotates off the low, look for that. This is very important. That separation, that higher high in price, right? Get that separation off the moving average, get that higher high in price, and that becomes now our entries as it goes here. Now, this is a bullish range in an overall bullish market. So the odds of a breakout in these scenarios are pretty darn good. Let's talk about, as we go higher here, how we trade breakouts. First things first is a breakout pullback. If you learn one thing from me in these videos, I hope it is that breakout pullbacks are one of the most consistent things we look for when it comes to range markets. Now, when I say breakout pullbacks, there's actually 2, 3 ways to trade a breakout pullback. For example, as we go higher, I love to look for that bear trap entry if we separate off the moving average. That is always my initial go-to entry as we break out, separation off the moving average. Now remember, the breakout leg of a trading range, creates a measured move. It's a measuring leg. So the size of that breakout leg allows me to now tell where that final target will be. Remember, if you want to make more money, hold your trades longer. Let your winners run. Yeah, letting winners run is easy to say, but we all know it's not as easy to do. It's much easier to let your winners run when you know where the market's trying to go, right? This is a very valuable skill by knowing the breakout leg is the measuring leg. Okay, so now that makes it easier for us now to let our trades run up there. Now, once we take our profit targets, now we don't want to what? We don't want to buy high. We don't want to buy high up there. Now we start thinking about, give me a pullback. Give me a pullback in this area right here. Now, when I say pullback, what I really mean is a two-legged pullback. When I think of a breakout pullback, I think of a two-legged pullback, right? One leg and two leg. Of course, think about a measured move, right? One leg, two leg. Now, I will say, right, they're not always two-legged pullbacks. Sometimes they're one leg going lower. My favorite ones, though, are one leg below 21 EMA, second leg lower. My favorites are a little bit more than a measured move. Think about a measured move that goes a little bit too far. I have a lot of examples of those, by the way, in that free video course I mentioned earlier. Again, all the links you'll need to join and learn these setups are linked up in the description of the YouTube video. Now remember, a two-legged pullback, it only gives me location. Okay, I'm not going to use indicators or blindly buy the area because for all I know, it'll roll all the way down. And I will talk about that here in a moment if we have time towards the end of this video. What I'll do here is again, with all of this bullish momentum, this is a horrible spot to be selling. So if I start seeing bears come out, try once, try twice, I can squeeze those stops. And again, I know this is a broken record. I know we use the same entry techniques, but you'll notice though, once you learn what works, you don't want to do anything else. Keep working what works, right? A failure, again, bear trap entry into the add-on, right? The higher high in price, separate off the moving average and go from there. Targets, of course, this one here are back up to retest that high, okay? When I think about a breakout pullback, I think that bear trap on the way up, breakout leg, measured move, a two-legged pullback into a failure trap combination, leave the target up to retest the high. Now, one different variation of this, which is somewhat common, especially since the S&P and Nasdaq are trying to rotate going higher. Because the rotation is going on right now, when markets rotate off the top and bottom range like this, oftentimes we'll pop up and begin to grind. Now, we talked about a variation of this. We mentioned that V bottom reversal earlier on the S&P chart. This is a very, very similar technique, you would say. What I'll do is I'm going to draw a trend line off the highs, bring that trend line down around the lows, right? Look left, find some of these prior swings. And again, the best entry here is the first test off of that low. Now, I can be a lot more aggressive on this entry. Why? Because anytime a market pops and grinds, whenever a market grinds higher like this, it becomes very difficult to stop. It becomes a steamroller, right? It's a runaway freight train. You'll notice, right, when markets grind up, they pop up, they grind. Everybody wants to buy those pullbacks. So pop and grind moves are really big clues to me in my trade room. The most important thing is you get that first pullback, that first test. Now, I love traps, like I'm showing you here, get below prior swings. But remember, it doesn't have to be a trap. It can also be below the 21 EMA. We can also trap the bears in once, twice, use their stops to fuel that move, and then add more on that trap add-on. So we can always use that same pattern there as well. I don't want to make it sound like you always have to look for a bear trap off of that low. Now, remember, one really nice thing about these pop and grinds is the pop leg is the measuring leg, right? The pop leg is the measuring leg. Once you know the size of the pop leg, pin that down at that low. That now tells you now where to leave your final target. Again, it's so much easier to let your winners run when you have a good vision of where your winner is trying to get to. And remember, I do all this in real time every morning in our trade room. So come out and do it with me. Come learn with me, trade with us. It's the easiest way to implement this stuff correctly. Now, here's one more question for you. What if we ran higher and we didn't get a pop and grind? What if we didn't get that higher high and keep going? What if we run higher and now all of a sudden we get one of these things, right? Where it rips off of that high, right? Well, what happened over here? Look. What happens? If it V-tops off that high like that, all we do now is we measure the amount above, we project down below, and we do what do we do? We do not let that fool us into thinking this is a reversal, right? This will feel like a reversal. A rookie trader will second guess themselves on that trade, but make no mistake, it's a range rotation. So one more bonus we'll talk about tonight is if we were to go higher and for whatever reason, Trump says something or something happens overnight, I don't know what's gonna happen tomorrow, right? All I know is where the best odds are, what I know right now. This will change tomorrow, and of course, we'll change with it. But if we run up, and all of a sudden we come in and we just blast back down again, we know better, right? We know, first of all, mark the amount above, mark the amount below. That's our level, right? That's our level. We also know this is not a reversal. It's not a reversal. It takes a lot more than that to reverse that big 60-minute time frame we saw earlier at the beginning of this video. But again, I'm not going to pick a bottom on this, right? I'm not going to blindly buy into it. I'm certainly not going to waste my time with divergence or reading tape or those expensive, order flow softwares that x-ray the candlesticks. All that stuff is all hype. I've never seen anyone successfully use it consistently over a long period of time. What I have seen work very well over a long period of time is finding good areas of support in an overall bull market and simply trapping in inexperienced traders. Professionals are not selling down here. Professionals are buying the dip in these scenarios while all the rookies are getting washed out and getting spooked out of their long trades. Buy right into those stops. And you know how this works now. Again, once you learn how ranges work, everything will get so much easier for your trading. I'm a great example of that myself personally. Again, remember, think about that. The amount below now, the amount above now. Now you know where that trade wants to go. So leave that runner. All right, I'm getting goosebumps just kind of talking about this stuff here right now. So I love doing these videos with you guys every evening here on this YouTube channel. Now, that is the plan for tomorrow. And speaking of tomorrow morning, bright and early, back in our trade room, the place to be, 8 o'clock Eastern time. Guys, the easiest way to start making money in these markets is to learn and trade along every morning at the opening bell. As always, I'm going to put all the important links you'll need, the description of the YouTube video. Start first with the free video classes. Enjoy all the trade examples. Again, most folks, they love that free video course. Hope you do as well. Then come join me in my trade room and we'll do it together. In the meantime, be well out there and be here next time. Adios, amigos. Bye for now.